Hi everyone, Dale Pinkert here. My Twitter handle is @ForexStopHunter. The first instrument we're going to be looking at today is the Aussie USD. Last week I said I was looking for a third drive. That really occurred in spades on Monday. Markets trying to stabilize, after a day we had on Monday. It's almost like a car wreck, and markets are trying to stabilize, and they might be in shock. S&P's bounced back very well today, but I'm going to show you the Nasdaq and show you how much damage was already done. Getting back to Aussie, sometimes on these wedges you could get throwovers, or in this case, it'd be a throw under underneath the red line, wedge line. And if that occurs, so you just get out of the way and wait for it to get back inside that red line. Not looking for any kind of home run balls, just potentially. I still think gold has some higher levels to achieve, and still possible that the Dixie could sell off here. Anyway, the divergence is there, the pattern is there. On a lot of trades, you have to say to yourself, I'd rather be wrong and get stopped out than see a pattern or a setup that I have been looking for and not assume some risk to see how it plays out. Now, that's the key thing, the risk. And you could reduce leverage. You don't have to plunge into every trade. Actually, I like to enter in thirds. So the next chart I want to show you is the Nasdaq. So we know we had a rebound today. All the markets came back, but look at this decline from 78.80, almost a 600-point Nasdaq decline. So, even just a normal correction after a decline like this could take it back to 7,600 and still be a failing rally. So, to me, this is a pretty excessive damage in the market, and I really don't think that we're going to recover to new highs. I see lower levels looking to sell rips, and that would be ideal if we had some type of 200-point rally in the Nasdaq from here to get shorted 620, being wrong over the highs. And I want to wrap it with crude. So crude fell victim, if you see this candle, to all the liquidation risk off yesterday, and really did fight its way back pretty good. So I think there's a chance, and I'm taking a shot here right around the 61.29 level, risking a buck on the trade, that if the market can recover a bit more and the dollar doesn't strengthen but weakens with commodity currencies bouncing, that crude might just have one more push to the upside. It's interesting though, the high that we failed from was at the 50% retrace level. Remember, I was talking about possibly as high as 64. That's still possible. So just, resistance line off these two highs here could take it up there, 61.8 at 63.75. So thought I'd take a shot and participate should we get it. And also, we can't forget the geo aspect of trading. I mean, charts are very important, and I make a living using charts. But you can't ignore what's happening in the Persian Gulf right now and the rhetoric, and with everything else that's going on politically, some type of adventurism or distraction might be exactly what the administration is looking for here. And things really do seem to be heating up in the Gulf, so it's hard to want to be short. I will take an attempt up there near the highs, but from here, there still could be some shorts squeezed out. This is Dale Pinkert at Forex Stop Hunter. Good hunting. Remember, don't just count your pips, count your blessings. Adios.